confession, confusing terms in fintech jargon come in trios. Here's one: partnerships, ecosystems, platforms. Confusion. Here's another one: financial goals, financial outputs, financial outcomes. If you want to understand the difference, which is very essential in the changing business models and in the embedded finance world, then listen to two amazing experts make these extremely clear through very specific examples. Enjoy.
Platform, ecosystem, and partnerships are the three most abused and confused terms in the history of business, at least from my experience and perspective. Everything is a platform, everything is an ecosystem, regardless if it is a value chain, a group of unrelated company operating in geographical proximity, and so on. A client is a partner, a supplier is a partner, and an employee is a partner, and so on. So there is a lot of ambiguity in this term. In most companies' ambition often include platform and ecosystem objective these days, without, in many instances, properly understanding what the actual business model is implied within that label. This is a realization that we had out of client experiences that prompted the thinking behind a post that was released on Share Knowledge in December 2020. It is called "Do Not Confuse Platform with Ecosystem."
The fourth industrial revolution is a platform revolution, namely an ecosystem platform revolution. Now, to succeed on ecosystem platform economies, we definitely need to understand the difference between outputs and outcomes that many banks and fintech entrepreneurs did not clearly identify. I give an example of output, thinking about the automotive industry. BMW wants to sell 1 million 7 Series cars next year. Those are outputs, number of cars, sales. What is outcome for BMW? Well, BMW uses Share Now to mobilize 1 million people in Berlin commuting to the office in the morning. It is very different because not only the experience is different commuting from buying the car, but also the way clients pay for that experience, for that outcome is very different compared to buying the car, the output. So what does it mean in terms of financial services? We give an example limiting to the world of investment management. UBS, to pick a bank, wants to sell 1 billion euros of asset under management of a certain monetary fund. There is an output, how much asset under management can be sold of a monetary fund. So what is outcome? UBS wants to help their clients, families, or businesses to achieve their personal, financial, or business goals. Those are outcomes. So it is very different what clients perceive as value and the way they remunerate the financial institutions for the engagement through that outcome economy perspective.